Hello, everyone. Welcome back to the MHP Show podcast. I'm your host, Derek Vickers, and we're talking mobile home parks, baby, on the MHP Show. And look, I'm back for an individual episode. This isn't, I haven't done one of these in a while, but I want to, start doing more of these just to enlighten you on, my current thoughts and feelings about mobile home parks and what we're doing at Victory Capital. And this episode is really about why I am still very bullish on mobile home parks moving forward now and into the future. And I still love this asset class. I love this asset class no matter what has happened with interest rates, that sellers are crazy on pricing, that brokers have, bad brokers. I work with great brokers, have basically just been buying listings, right? And it inflates the seller's ideas about what they can get on price. And so they buy their little skiff in the Caymans now, and they're floating around, and already they've spent the money, right? So despite all that, I am still very bullish on this asset class, and I love it. And in this episode, I'm going to tell you why. But before I do that, look, if you're an accredited investor and you love this asset class and you've done your research on it, and you're like, Derek, man, I would love to do what you're doing, but you don't want to do the work. You've actually not been sold a bill of goods on, hey, this is a passive investment, because it's not. Because in the beginning, you're gonna have to buy value add properties, and it's not a freaking passive investment. I hate to tell you and hate to break it to you. But look, if you still love that and you don't want to do the work, that's why you should come invest with us at Victory Capital. If you're an accredited investor, you don't want to do the work, you don't have the systems to find deals, you don't have the systems to manage the deals, that's why you come work with us. We actually have the acquisition system to find undervalued deals. And I know people that are doing big money in this space, and they don't have the acquisitions team that we have, and they're just waiting for brokers to send them deals. We have great relationships with brokers. We get pocket listings from brokers, but more than that, we've got an off-market system that I've built and developed that allows us to go find off-market deals that are undervalued, and they're severely undervalued, but also because most people want to do mobile home parks, but how can they execute on it? Right? And can they execute on it? And well, how do you know Derek and his team can execute on it? Well, I've done it, and I made mistakes. I've learned from those mistakes and really implemented systems, management systems that are professional, that can get us through and don't allow those mistakes to happen again. So if you want to invest with people that know what they're doing at Victory Capital, you need to reach out to us. You can go to victorycapital.com. I'd love to get on the call with you, or someone from our team will get on a call with you about our most recent fund, VC Equity Fund 1. We literally just launched this to our main investor list, and we've already got commitments. Early investors will get enhanced preferred returns on this. So reach out to us at victorycapital.com. I'd love to jump on a call and help you, dude. Get out of the trap, man. Let's invest. Come on, let's go. Okay. So I wanted to talk about today, like, really why I'm still very bullish on mobile home parks. And there's a few reasons why. So one of them, MHPs, mobile home parks, are still undervalued and underpriced relative to the demand. And what do I mean by that? You may be like, man, I've been on LoopNet and Corexi and the prices are outrageous. I got it. I hear you. Okay. I hear you. But if you think about it like this is a still very supply constrained asset class, right? I can't go into Phoenix. I can't go into Dallas. I can't go to Orlando. I can't go to zoning in Tampa and say, hey, I want to develop a new mobile home park. You cannot do that. They're going to laugh at you because they don't get the tax money that they get from a 10-story, 600 unit apartment complex that they can charge $3,000 a month in rent. So they don't get that with a mobile home park. So you can't develop them. Although the talking heads in the government and the bureaucrats will say, hey, we want more affordable housing. Okay, yeah, they'll say that, but doing that is actually different. And this is why I still love mobile home parks, because the supply is constrained. Developers cannot build affordable housing. So there are people that are converting office and other things. They're converting and trying to get some affordable housing out on the market. I've seen, not an expert on it, but I know there's some other stuff coming online. But mobile home parks are still the cheapest place in town, because the other things that I just talked about, there's actually not that many of them. And most of the stuff you see being developed in the cities today are not affordable housing. And pretty much all the mobile home parks that are being developed now are not affordable housing. You have to go in and pay $200,000 or $300,000 for a house. You might as well go buy a stick built home, right? So this is not affordable housing. At Victory Capital, we don't target 55 and over communities. We don't target these 5-star communities because it's a different business model. So I still think that these things are overpriced relative to the supply. Now in 2021, we were buying a lot of stuff, right? And then prices jumped. So now I think the buyers in the market is catching back up to where the sellers were, and there's going to be an opportunity in time to where we can actually go in and buy them undervalued, right? And I've had to switch my thinking on how we go in and create value and how we look at some of these prices and not get stuck into the sacred cows of mobile home park investing. For example, when I first started investing in mobile home parks, I found a deal for $60,000 a space in 2021 in Clearwater, Florida. Now, someone who was attached to the sacred cows of mobile home park investors was like, oh my God, it's a covered land play. Okay, got it. But now I would buy anything down there for 60,000 a pad, right? And so we almost have to adjust our thinking, right? And just kind of step out of it and not be so into it and locked into like, hey, we got to get this for 40 a pad and get this for 50 a pad. And so we've adjusted our thinking at Victory Capital. And I still believe that a lot of these parks are undervalued. Some of the stuff on market, you're not going to be able to make the numbers work. But we have a system that where we can confidently go in and buy these parks off market that are still undervalued relative to the supply that is there, because these parks are not going to get easier to buy. Next year, they're going to be harder to buy, and the next year, and the next year, and the next year, they're going to be harder to buy. So that's where we're trying to buy now, because we will regret not buying later. Okay. And the consolidation is still happening, right? It's happening. It's more consolidated now than it was in 2020. We have an opportunity here now to really go in and take advantage of this. And so that's what we're doing with our fund, because we want to go in and take advantage of this market. We want to take advantage of still buying from mom and pops. That's our sweet spot. We want to buy from mom and pops, or we like to buy from operators that have bought in the last 5 or 6 years. And so they've still underutilized and underoperated and not fully maximized the return potential of the property. So they're really just a step above mom and pop, unfortunately. So that's what we're going in to take advantage of. So the other reason why I'm bullish on mobile home parks right now is there's really still rent gaps in the market. Like, what am I talking about? Rent gaps. So when we first started buying parks in Tampa, there was a rent gap. And what I mean by a rent gap is that, hey, supposedly market lot rent is 400, but people are paying $1,500 for park owned homes, right? So I know that there's some kind of gap in there, right? Because just because Johnny's charging $400 down the street and he's full doesn't mean it's the market lot rent. So you have an opportunity to buy some of these parks and go in and convert park owned homes at higher market lot rents than, maybe you would think about before, because it's a supply and demand thing. And so there's still rent gaps, right, in certain markets where we can go in and take advantage of these things and add massive value quickly and do really well for our investors. We upgrade the communities, and we do good for really the community at large. So the other reason I'm bullish on mobile home parks and why, like I'm personally invested in these things. Like my entire net worth is in mobile home parks. I literally have no net worth in anything else. I think I have a little bit of stock from my insurance company that they still gave me every year as I left. But I have, like, on a yearly basis, sold that and invested that in our mobile home parks, and I will continue to do that. And so I'm personally investing in our fund because I believe in this asset class, and I believe in my team's ability to go in, take an asset that's a 1 or 2 star park and turn it into a 3-star park, a 2.5 or 3-star park, and we're lifting the value, creating long-term cash flow for our investors, right? So I am super, super bullish on this, and I'm going all in on it, and I will continue to go all in on it, because I think the saying is that Was it they're not making any more real estate? Yeah, that's true. They're not making any more land, but they're definitely not making any more mobile home parks. And I just know that over time that these things are going to do really, really well. And once we scale a portfolio and create the, even more scale, right? We are going to be able to take this portfolio and offload it to a bigger group, because as the bigger groups gobble up all the massive stuff, they're going to have to start coming down and buying the mid-level, the 50 to 150 stuff. Because if you even look in markets like Miami, there's a lot of bigger companies that have actually bought, 40 and 50 unit properties down in that area. The other reason why I am super bullish on mobile home parks is because of this economic uncertainty that we're going through right now. Political turmoil. There's never been more division, supposedly, in the United States. So there's a lot of noise going on. Like there's recession talks, which I think we've already been in a recession since interest rates started to move. But that's another topic for a different time. But this all makes me more and more bullish on mobile home parks because it's the cheapest place in town. So when a recession happens, the person that was renting for $5,000 a month, maybe they go down to 3,000. The people that were paying 3,000 a month, they go down to 1,700, and the 1,700 people go, so people go down. The people in the mobile home park, they're like, man, dude, I don't have anywhere else to go. So I'm going to stay here. I'm going to pay my rent, and I'm going to be a great tenant because the landlord is taking care of me. And there's no cheaper place in town for tenants to go in mobile home parks, right? And so it is a huge value to them. And I am bullish on that because even in economic uncertainty, we are still great. And it is the most recession proof asset class on the planet. I will say that. And it's on the planet because we only have these in the United States, and Canada has some, but they are recession resistant, right? And we're really the only asset class that can be 100% collected in theory, because once the people move into these homes, they stay there for an extended period of time, and a long time. So we don't have constant lease up of people going in and out, in and out, in and out. And I love the aspect of that. Now, the other reason why I'm so bullish right now is that some people aren't buying right now. They have taken the back seat. They have become effect. They have said, "Oh my gosh, there's no deals to buy. Oh my gosh, the interest rates are so high." So okay, so instead of taking that posture of me being the effect of something, I'm going to go out and be cause over the damn thing, right? And so that's what we're doing. We're doing more outreach, more acquisitions outreach. We're doing more outreach than ever. We're getting more deals in than we ever have. So we can actually go out and create value for our investors, because interest rates are not going down anytime soon, I don't think. Until Mr. Jerome Powell, because he doesn't like Trump, is out of office next year, that's going to be the time that interest rates may or may not go down. But I'm planning and pro-formaing interest rates, pro-formaing, new verb there, that interest rates are going to stay the same. And what I like about this, it gives us an additional margin of safety so we can, underwrite effectively. If we're underwriting an exit at a 7 cap, I think there's a pretty good chance that we hit that in 5 years if we don't exit before that. And exit meaning refinance or sell. But if it's a 6 cap, the returns that I promise are going to be far exceeded, as most of our deals do anyways, because I'm under promising severely. And I'll just say that on my projections, because I'm not this guy that's going to say I'm going to give you a 50% return. But we are remaining cause over the situation, right? And when people go out and they get negative, they listen to the media. And that's another topic. Like, listening to the media now, like you can get your little pinch of news here and here, you're going to become negative and you're going to hate everybody. You just are, no matter what side of the aisle you're on, which is whatever, right? But don't get bogged down in this. And I hope other people continue to do so, because we're going to be cause over the situation, and we are going to go out and continue to buy mobile home park communities. We're going to deliver massive outsized returns for our investors. And we're going to improve these communities and put more clean and safe, affordable housing on the market for people to take advantage of. And if you're not going to do that, you're going to remain on the sidelines. You're going to be affected, and you're just going to be negative, and that's fine. But the market is shifting. You got to change your mindset. You have to become cause over the situation, not effect, right? The prices are not going to go back to 2020 or 2018. Like, if you're sitting and waiting for the market to crash, good luck. I'm going to go acquire another 2,000 units while you do that, right? And we're going to deliver to our investors while we're doing that. So this is why I'm bullish on mobile home parks and why I still love the asset class, even though there's a consensus around that it's hard to buy right now. I still love the asset class, and that's why I'm going all in on it still. And look, if you want to be a part of what we're doing at Victory Capital and VC Equity Fund 1 for accredited investors only, you can go to our website at www.victorycapital.com. It's VICKTORY capital.com. I would love to schedule a call with you and my team, and we will talk to you about what we're doing at Victory Capital and how we can help you achieve those alpha returns that you are looking for in the most recession resistant asset class on the planet. So thanks for tuning in to the MHP show. We will see you all next week. And look, leave a comment, like, whatever. If you have any ideas for what you want me to do for the podcast, I'm open to helping in any way I can. If you check us out, you can check me out on all the social media platforms. I'm there. And we will see you on the next MHP show. And let's get after it, dude. Don't be effect. Let's be cause.